Hello, everyone, and welcome to the NASDAQ Dorsey Wright Monday Analyst Discussion. My name is Ian Saunders, and joining us this week is Sara Mehle. Coming in here on Monday, we're seeing a lot of green on the screen. Most major domestic equity indices are marching pretty significantly higher here this morning. A little bit of a change of pace of what we saw last week, and definitely not a bad way to start the week off, Sara.
Yeah, Ian. Today we wanted to take a look at the 20-point chart of the S&P 500. We saw a notable breakout today with the triple top at 2960. And so if you're pulling up the chart of the S&P on the research platform, on the left-hand side under other scales, just click on 20, and that's where you'll find the 20-point per box chart. It's just a little longer term. But today, after reversing up, let's see, into X's last Friday, which you can see with the green X's there, today we saw a rally up as high as 2960. So that triple top has returned this chart to a buy signal. It briefly moved to a sell signal last week. Another kind of different scale that we're watching is the 50-point chart. So with that chart, again, this is even like a longer term view than the 20. In that particular chart, we actually saw a reverse up into X's today. So to click on the 50, or to open up the 50, again, on other scales on the left-hand side, and just click on 50. So now we are one box away from a potential third consecutive buy signal on this 50-point chart. Moved back into a positive trend not too long ago, and again, has completed 2 consecutive buy signals. So some follow through there. And as we've been discussing, large cap driven market for sure. We've taken a look at the value and growth kind of dispersion within large cap, and we're seeing some larger than usual numbers. So just on a year-to-date basis, for example, the RPV, which is the Invesco S&P 500 Pure Value ETF, through Friday is down a little over 39%, whereas RPG, so the Invesco S&P 500 Pure Growth ETF, is down a little over 7.5%. So that's about a 31% performance differential there, with the S&P 500 itself through Friday down a little over 11. So Ian, I think you want to show us where we can take a closer look into that relationship.
Yeah, absolutely. So Sara mentioned here, seeing the broader indexes march higher, but this continued march of the S&P 500 has been led by that growth camp really throughout this rally. We see that reflected as well in taking a look at the asset class group scores page on the platform, which you can navigate to by going up top, clicking on asset allocation, and then clicking on asset class group scores. It'll default to what's called a macro view, but you can use the set view filter to change that view over to view US styles. So hit US styles and hit set view, and it brings up the different size and style comparisons that we can look at here for ETFs and mutual funds. We note that, as well as on the backs of that kind of performance dispersion that we see within the growth camp, the growth over value theme has been carried over not only just in large cap equities, but really across the board in domestic equities. We see growth over value in large cap, mid cap, and small cap, and that's a theme that has remained consistent throughout this market drawdown. We saw that heading into the beginning of the market decline there at the end of February, and that's something that has remained a very similar looking page. While the scores on this page have definitely changed, the continued strength of the growth camp relative to their value counterparts has remained pretty consistent. In order to take a deeper dive into that large cap specific area on this page, you can actually come in and click on this graph checkbox between the US large cap growth and the US large cap value groups. We can see US large cap growth is currently scoring at a 4.25, and is the only size and style breakdown that is above the sought after score range of 4.0. On the flip side, US large cap value currently scoring 2.24 is down in that low field position in the red zone, as we would see on the page. When you click on the graph button, you can actually bring up how those scores have changed over time. And in a very similar fashion that we saw there with the large performance dispersion favoring the large cap growth camp, the dispersion that we see here from the group scores perspective is one of the largest that we've actually seen throughout the history of these score comparisons. You can see that these scores definitely are not going to follow each other at all times, although many times when you see equities in and of themselves rise in strength or have maintained strength, these scores will generally move higher in tandem. But in looking in recent history, you can use this little movable slider on the bottom of the page to drag the history down just to show this recent movement. And we can see really over the past year or so how this movement from both growth and value within U.S. large caps, so the remained movements have been similar. The value has really fallen off the board with this recent decline that we saw here beginning at the end of February. And then the rally that we've seen over the last few weeks has just furthered this dispersion, coming in at some of the highest dispersion levels that we've seen for these two groups throughout the entire history of this asset class group scoring system. So good to see that performance dispersion that we see carried over to some of the other technical indications of strength that we see here on this group scores page as well. In looking at some other areas outside of maybe the large cap and even the domestic space, we've seen some improvement carried over to foreign equities as well as the domestic. We still have international equities as the last ranked asset class in our Dolly ranking. We've seen the long-term strength of international equities has improved slightly with that asset class gaining some buy signals, but it hasn't led to enough improvement to lead to an asset class ranking change, at least here not yet. One way to take a deeper dive into the international equities asset class, though, is to again come in here to group scores, and you can click on the non-US view filter and then hit set view. And that will bring up a little bit of a deeper dive into the different regions or countries that we might be taking a look at, or that you might have the opportunity to invest in within the international equity space. And in doing so, we can see that some of the groups that we previously saw are going to remain static on the page. Your S&P 500 index funds group, we can see they're scoring up the top above any international area with an average score of 3.58, kind of furthering that large cap dominance, domestic equity dominance that we've continued to see over the past couple of weeks. But we see, interestingly enough, ranked pretty close beneath it now is China, scoring very well for the relative to the other international areas. At a rank of 33rd out of all 135 different groups with an average score of 3.32. And another interesting point to take note of is that it is the only international equity focused group with a positive score direction here on here looking back over the last 6-month time frame. So while some areas have seen improvement, again, that score direction is looking at movement from a high or a low over the past 6 months. So many of these international groups have seen an improvement since bottoming out earlier this year, but hasn't necessarily improved enough to lead to that directional change. But we have seen that China has seen that change, is back in above the 3.0 score line and our more favorable score territory. And it's led some of the other international areas higher, your Pacific region groups, Super Pacific, Pacific Basin, both scoring above money market. Asian equities, broad Asia, continues to kind of battle it out with money market there right around that 2.50 score line. They've been moving back and forth between each other over the past week or so. So it's definitely interesting to see that the China group is kind of pulling many of the other Asia groups higher up on these rankings as well. Most of the other international breakdowns, you can see Latin America, Middle East, Africa equity, India, Europe, all down in the bottom end and very low field position, the red zone on this group scores page. So maintaining that outperformance of the Asian equity space is definitely a continued theme that we have seen over the past week, and will definitely be a place to monitor as we move forward towards the end of May here.
Yeah, thanks, Ian. So as we close out the Monday, it looks like we have about 45 minutes of trading left today, again, Monday, May 18th. Something that we're watching, the bullish percent for the New York Stock Exchange, which again measures the percent of stocks within the New York Stock Exchange universe that are on point and figure buy signals. So it's really a participation and a risk indicator. In early May, it reversed down into O's after reaching the 70 mark. And then last week, we actually saw it move to bear confirmed, where it fell to 40%. Today, it looks like with our intraday readings, we are less than 1% away now from reversing up into X's, which would put us back on offense. And again, that would happen with a move to 46 or higher. And it looks like we're at 45, around 45.5 right now. So that is something that we're watching. And you can always set an activity alert by clicking on the blue set activity alert button off of the chart itself, and turn on the column change so that you'll receive an email if there's and when there's a change.
Yeah, absolutely. I mean, we've seen so down within 1% after today, at least with a little bit left in trading this afternoon. I guess we've learned anything over the past few weeks is never say never, but currently still sitting a little bit south of that reversal point. However, this continued outperformance we've seen from the large cap camp has been reflected on the bullish percent for the S&P 500 as well. We're looking at over 12% reversal or 12% movement to the upside for the bullish percent for the S&P 500. Which is going to put that chart back into a column of X's. So the interesting thing to note, given that the broader bullish percent for the NYSE has more of those small cap, mid cap names within it. Seeing that size breakdown definitely is represented here. And again, the smaller the inventory of names that you're looking at, the easier it is for these charts to change, because these are looking at the percentage of stocks within each inventory that are on a buy signal. So if there's less stocks you're looking at in the inventory, then less stocks need to go to a buy signal to dictate a change. So we are seeing that reversal move higher for the BP SPX. It does move around a little bit more frequently, but we'll definitely make that BP NYSE reversal a point to watch out for as we head towards June here. One other point to mention, we brought up the S&P chart, the 20-point chart of the S&P at the beginning. So the other point that we're looking for moving forward from here, we had that further support level that was set up with that reversal back up into X's there last week. So now, again, as Sarah mentioned, breaking out to 2960. Your initial support is going to be coming in there at 2780, and then further support just beneath that at 2740 from April of this year. So with that, I think we have wrapped up most of what we were looking to cover this afternoon. If you all have any questions on anything you're seeing going on the site, any indicators, maybe it's a chart action that you're seeing that's not making that much sense, you're always more than welcome to reach out to us. Even though we are still in a quarantine work from home environment here on our end, we are still available over the phone. If you want to reach out to an analyst, you can give us a call at 804-320-8511. It'll more than likely in the current situation be you give us a call, we'll give you a call back, but we're definitely still around and more than happy to help. We're also available via email. If you have any further questions that you wanted to type out instead of talk, you can reach us at dwa@dorseyright.com.
And just as a reminder, we do have 2 webinars this week. On Thursday, we have a fund score based webinar that will be hosted by Ian and Steve. And we have our beginner series webinar on Friday at 2 p.m. That Thursday webinar is at 1 p.m. And all registration information will be available in our daily equity report up in the Where You Will Wear section.
So with that, we'll go ahead and wrap up things here on this Monday afternoon. I want to thank everyone very much for joining us this week, and we look forward to having you back next week.